Hey, what's going on, everybody? Hope everyone is enjoying their 3-day weekend. And yeah, hope you're using this extra day to find a way to get better at this craft that we're all pursuing here. So let's get started. So you see, I started off pretty decent on the week, and then I actually took a red day here and a red day here, obviously both on Tesla. But all combined for the week, I made, let me calculate real quick, $1,617 for the week, which ain't too bad. And so yeah, I'll go ahead and cover the trades I did. I took 2 losses on Tesla, and I broke even on Marvel, which is unfortunate because I did take off, and so did Tesla, but it's always easier in hindsight. So let's go ahead and review the trades. All right, and remember, only going over the ones that are closed, because the ones that are open, we'll just go ahead and review them again next week. So no reason to make the video longer than it has to be. All right, so blink. Right here you see that the position entered was a 9 days to expiration 48.55 bull call that I entered for approximately $3. And I price hit the 786 fib level, and it couldn't break above, so therefore I closed it. I was risking about $300, and I made 964 after commissions. So the setup. So basically it's the same. The squeeze is the same setup every time. Definitely a very good, it is a very accurate, high probability trade. It's definitely a setup I wish I would have learned in the beginning when I first started trading. And even as a prop trader, after I learned about it, I was like, why are we not teaching other traders this at the firm? Like, this is too good. But anyways, so the squeeze over here on the weekly chart, the squeeze is firing, as it says right there. All EMAs are stacked positive. Right here on the daily, the EMA is stacked positive. We have a squeeze. Price is at the 21 EMA, and the candle prior closed on a hammer candle. So that tells me basically that the buyers sold off in the day, hit the 34 EMA, the buyers came back in and pushed all the way back above the 21 EMA. So I'm already thinking prices can go up. My 10x bars are also green across the larger time frames. It's going down. There was a 30-minute buy arrow the day prior. And yeah, so we'll go right here. As for the day, like I said, I entered on the next day after the hammer candle and closed it right there. And I'll go ahead and pull over the live chart too, so you can see it. All right, let me get it real quick. So what I was watching, I guess about 30-minute chart. So if you remember, it bounced right here, right? And I entered somewhere around this area, and whenever I saw this happening right here at this 786 fib level, that's when I closed the position. And then you can see since then, it's just been going back down. It still looks great. It's just a pullback, and I got out before the pullback. See if this will show it. Yep. So like right here was a 786 level, and those triangles indicate where I got out of the position. So entered here, rode it up to up here, and got out. All right, Neo. I finally jumped on the Neo bandwagon. I know this has been all over the social media, but I entered a 9-day to expiration 53.57 bull put spread for $1.95 a credit. Closed the position once again because I couldn't get above resistance, and I also had a time stop. So what that means as a time stop is something I'm utilizing in my trading plan this year and something I haven't done before. And the next video plan I'm putting out is actually my trading plan for 2021. But long story short, I do a rolling 2-week period, 3 to 5 day trades, but the week of expiration they have a time stop between Monday and Wednesday. I close the position at its current price because it is not moving as I expected it to. So the reason for entering, you see it has green 10x bars, pulled back to support, and you see support was holding right here in this 30-minute chart. Oops. And that's all it was. So this was a green 10x play, and all that means is the larger time frames are green and it's pulling back to support, and I'm expecting it to hold, and my stop is right at the bottom and I'm wanting it to go higher. Now I got out at resistance at the, so it's stalling out right here, obviously, in that area, and at a time stop wasn't exactly moving the way I wanted it to, so like I said, I also got out. So not too bad for a almost $700 winner. So the week was looking good. I have a SPY hedge on. All right, Texas Instruments. Once again, another 9 days till expiration. Bull call for 319. Green 10x bars, larger time frames. It's right at the 21 EMA. Is right where I like to enter. I really enjoy entering as price is coming down, is selling off, and I'll come in and scoop it up and then ride it higher. Those are really good for credit spreads. But you look over here on the 5-minute, how this price kept on holding and then it started crawling higher. Also had, oops, there we go. Stacked EMAs in all time frames. Like this squeeze has been firing forever, I guess. We have a squeeze right here. It's above zero. So make a pressure squeeze above zero. EMAs are stacked positive. Came in and swooped up and got it. And I exited the position as it came right back up to this level, the 100% retracement. I'll go ahead and show that as well. If you look at it now, it's really good. It definitely took off. The squeeze is firing. So yeah, I got in down here, right? And got up here near resistance, and then now it's all the way up here. But yeah, another 635 winner after commissions. And yeah, just as you can see, I do the same 2 plays, which are basically squeezes and 10x setups, which are basically the easiest way to explain 10x bar setups is basically you're expecting the shorter time frame trend to stop and then the larger time frame will resume. So it's almost like just buying the dip, except you get confirmation of which is the stronger trend. Oh, I guess I clicked the wrong one. Marvel. This one shook me out. And right now I'm a little sketchy on the market because we're really extended, and I know we closed really strong on Friday, but it's when I go over my weekend prep, you'll see what I mean, why I'm a little sketchy on it. But it also is yeah, so I stopped at a break even. Anyways, so 14 days of expiration, 50.53, bull call for 125. And I stopped out because the overall market was having a difficult time deciding to either go higher or lower. Like both candles at the time closed on almost dojis. And I was expecting a pullback to the 21 EMA and the S&P futures. And we're also 2 ATRs away. Marvel was hesitating. So anyways, I decided to cut it. And the reason I entered the trade, so you see right here, larger time frames green, pulling back to support. It's holding right here. The weekly chart has stacked EMAs. Bullish momentum is just now starting to slow down. So as a pullback is happening, that's expected. And it's just been riding this 8 EMA higher. I was expecting this pullback to happen and then go higher. But as you can see, I got shaken out. I was weak hands. So entered as it was coming down right here. Exited on this doji. Like I said, it was having a hard time deciding if it wanted to go higher or not. And I wasn't going to let it become a loser. I was just going to cut it at break even, which I did. I entered it at 125 and closed it at 125. But in hindsight, you can see that it just simply came down, hesitated, and right back up. Nonetheless, it's always easier in hindsight, but closed it at 125, literally only paid $20 for commissions. And so yeah, break even on that one. All right, my losses. Oh, Tesla. And I don't know why. Okay, maybe I didn't upload a photo here. I can explain it all right now. Let me pull up a Tesla chart. Here, I'll show you this first. So obviously I entered right here. As price was coming down to the 21 EMA, I was trying to enter, and then once it flushed down past that part again, I just held on looking for a bounce, and then I just closed at the bottom and it kind of drifted higher, right? It just wasn't looking overly great. And like I said, I was trying to enter near the 21 and 34 EMA, looking for a bounce, a stronger bounce, but it obviously didn't happen. So stop out. And then I re-entered. And step on 11, go here. Once again, entered at the money credit spread at the 21A, stopped out. And the reason I stopped out again, well, hold on. I literally pegged the bottom. So got in on the re-entry, expecting a bounce. Came up, did not. On the flush down, I was like, all right, I can't take anymore. Got out and right back up. And this position was a 800 790 bull put spread for, I believe, 230. And anyways, it's feeling a little nervous. Got out. Like I said, the market's making weary. Another loss. So that's the trades that I closed. If you want a quick review, you see what I'm in. I'm in laser, playing the squeeze. And I know I've been saying "and" a lot. So the stock's currently right here. So I'm past my max profit level, and I'm just taking advantage of the theta decay over the long weekend. So that's looking good. I'll scale out of that. I got Home Depot. This one currently kind of showing a loss, but we'll see how it looks on Tuesday. See how it looks on Tuesday. I have a Q's Butterfly, and I can explain why I have that Q's here in a minute. Just because it's looking like it might retrace a little bit, so I just need to stay in this range. I'll make about 20%, taking advantage of the long weekend. My SPY hedge. Alright, my hedge. So I'm risking a max of $480 to make a max of $2,300-ish. If the market was to flush down near the 8 EMA, it's just a hedge to protect my other positions. It's a small insurance policy, if you will. Alright, I also have Google. I was playing this 30-minute flag right here. Entered about 2080, and it's, as you see, the squeeze is starting to fire. We get some momentum going. I just need it to go into next week. And what it looks like is this. I'm already at max profit area. So I was risking $1,300 to make about almost $1,200. As long as it keeps firing, I'll be good right there going into Friday. So those positions just are going into Friday. Anyways. So that's what I have. Now let's go ahead and take a look at the overall market. All right, this is the S&P 500 futures. Okay, so I got the high from here down to here, and it is bringing up these fib levels. So now that we broke above the 1272 extension, I'm keeping an eye on this 1278, which is near 4,000, and I can see it's going up to 4,000 and finally drifting back down. So that's why I'm kind of cautious on the market. As you see, every time it goes from 21 EMA goes down, 21 EMA goes down, 21 EMA back to and then right here, 20 EMA going higher, and these are some big fib levels. And it also goes based on here. Let me get a different color pen. Okay. So this yellow line up here is 3 ATR, 2 ATR, 1 ATR, and the 21 EMA. And you see we've been cruising near the 2 ATR back to 21 EMA. 1 ATR, 21 EMA, 21 EMA, back to 2, 21 EMA, 2, all the way through the negative and all the way back, and we're back up here. So anyways, I'm counting on that to be resistance before we potentially roll back down to the 21 EMA before going higher. And another thing to consider, so let me get my squeeze chart. So by definition, a squeeze fires from 8 to 10 bars. Right now we are 3 bars in. Right? So we went from mid compression to low to firing, right? So let's remember mid compression squeeze. Go ahead. Whoops, not that one. This one. Down here, where it says mid, and I don't know if y'all know this, drawing an arrow is extremely hard for me with the mouse. This mid compression squeeze. So this is the stats. This gives me all of the stats. So like it tells me that the squeeze has fired, that mid compression squeeze has fired 40 times, 27 long, 13 short. The average length of a squeeze is 7. And so what I'm wanting to look at, the average squeeze run is 6, and the longest is 14. On an average, it moves about 1.8%. After it fires. So basically what I'm getting at is if the average squeeze run is 6 bars and we're already 3 in, can we take 3 bars up to this 1618 level before at least coming down and retesting the fire line that's right there, or the 21 EMA, or we just chop around there? So that's why I'm kind of hesitant on the market. And the NASDAQ, same thing. The only difference is we're up here at the 2 ATR level, right? The only difference is now we're getting early out signals. And same with the, you look at the squeeze chart. The squeeze fired, that's 6 bars. We're up here at the 1272 extension. We're kind of hesitating, so we're getting early out signals there. Momentum is starting to slow down, so we may just kind of go sideways or pull back a little bit. That is why I put on that QQQ Iron Condor, because I'm expecting us to pull back a little bit or just chop from here. And it takes advantage of the extra day off, or extra day that the market's closed. So basically what I'm getting at is my overall outlook on the market is bullish, obviously, because that's obviously the direction of the trend, but short term kind of cautious, expecting a pullback relatively soon. Now, all that being said, I don't have a whole lot watching going in next week, but there are a few trades that I am watching. So Apple is looking like a good 10x bar setup. And why is that, you ask? Well, I will tell you. So it's obviously went up, came back down, test support, and it's at the 21 EMA, which is my entry level, or my entry zone, if you will. Let's go ahead and restore. This is my 78-minute chart, and you can see that the way you could do this is we have buy arrows here. If support's still holding, I'm wanting to enter a credit spread or a bull call spread. We can mess with it here in a second. And then expecting it to go higher anywhere from 9 to 14 days out. I was messing with it earlier, trying to find a position I would want in this. So I like to buy, if I'm doing a bull call spread, I like to buy the Delta 60s, sell the 30s, or if I'm doing a bull put spread, I will sell the 60s and buy the 30s. But that also depends based on this indicator. But since there was no squeeze, I'm not expecting it to get all the way up here to the top, all the way up here. So that's why I'm leaning more towards a I usually lean more towards the credit spread, but I'm not in this case, and I'll show you why. So right here is a chart or a risk graph of Apple, and right now it is currently showing this one right here, the 34.39 bull call for $1.12 is what you could get it right now. That's obviously could change at the open, but what it's showing is for break even, it just needs to move this little bitty bit right here, right? And I'm going to move here in a second, and then just pay attention to this box right here. So I usually put $1,200 to $1,500 of max risk in my trades. That's it, and I'm doing relatively decent. I'm not throwing huge weight at it, or considering the account size I have. So If you look right here, it says at that box that I was pointing at right here, it says max loss is 1,272 and max profit is 1,728. So I like to keep it at least where I get a max profit of 100%, which I won't because I'll close it beforehand, but it's a possibility if I want it. But basically, it only needs to move $1 for it to at least be in the break-even zone. And if that support level holds, and my 34 EMA is my stop. So we can do this. We'll say it opens flat, just for the sake of this exercise. My 34 EMA is at 133.26, which is this purple line. So we'll just make the stop at 133. So come over here. All right, so I'll move this, and if you didn't know, down here is stock price. Look down there as I am moving the mouse around, and you can look there to see the total cost per price. So go down to 133. So about $390. So I could risk about $390 to make a max profit of 1,728. Could it blow completely down past? Absolutely it could. But that's not. It doesn't always happen that way. And then if it does, then I could always take the larger loss than expected. But that's not fun. But it can happen. But it's a solid risk reward, even if you were to position size for max loss and just let it work. But 34 EMA is usually my stop. So this is a trade I'll be watching for as Apple. I have Tesla here for my Green 10X once again. And the reason I stopped out of Tesla, I didn't cover that whenever I talked about it earlier. Shame on me. So the 10X bar started turning red, telling me momentum's going down. And then the squeeze on the daily, the histogram, is also going negative. So I just had to cut it. I was getting shaken out, not liking it. I didn't like the price action. Though, looking at it now, you're like, it don't look that bad. Obviously, it doesn't. It's like, boom. Just consolidating in this little square. Looking for it to go higher. Anyways, got shaken out. I can admit that. Moving on. Okay, squeezes on watch. Alright, first up is RH. So I'm liking it because, let me pull up all of them. So you see over here, weekly stack positive, been trailing that 8 EMA, it's been squeezing. Right here, we have a daily squeeze, stacked EMAs, and it's at the 21 EMA. That is what I like to target. Or not target, but as my entry anyways. And then you see how the candle is now blue? That tells me that the histogram is now starting to turn positive, which it is because it says right there, 87. And then the 195 minute also has a squeeze, looking for it to trigger higher. So I like RH on the squeeze spectrum of things. Looks like a solid squeeze setup. And Amazon. Amazon daily is looking good. It's in a daily squeeze. But what's looking really good is the weekly. This high compression squeeze starting to shift higher. Looks like the ascending triangle in the weekly standpoint. So this is an excellent entry point for a ride higher. You could even go further and date. Even do out of money debit spread if you want it for a really good risk reward. Waiting for this squeeze to fire. But anyways, looking like a solid squeeze. Enter at the 21 EMA. And I was also messing with this to see what I would like to enter. And it would be a 30-60, probably a 60-30 bull put spread. Probably not. Actually, that's what I put together down here. And I don't want to risk about $12,000 on a trade. But what we could do is if we did at the money, slightly out, stretching this thing out. So on a 10 lot, you could risk $2,600 to make about $2,300. So that's pretty solid, and you could always go smaller if you wanted to or whatever. So that's a consideration going into next week. Say I already go in Tesla. Spot looks good. I just don't like the liquidity in the options market, but it is a squeeze. I can cover it real quick. See how it's curving up. Squeeze going up. We have a mid compression squeeze right at the 1618 level. If it gets squeezed and get firing or pull back near the 21 EMA, I may enter, but I'll keep an eye on it. But I'm not exactly liking the liquidity in the options market. And Chewy just straight up took off without everybody, and I'm just keeping an eye on it, see if we pull back to the 21 EMA, because the squeeze, I believe, has not fired yet. So it is starting to move higher right here. So since it's out of the Bollinger Band, maybe we get a little dip, enter, and then we go higher again. But this is all based dependent upon what the overall market does. But yeah, that's all I have for you. I hope you found this video helpful. If you have any questions, please go ahead and ask. Like the video if you found it helpful as well. Share with your friends. Go ahead. I'm open to any suggestions. I need to do an update on the small account challenge because if you saw the video a week ago, 2 weeks ago, the weekend prep and review, but when I took that really big loss in XPX because I lost internet, I was also in a SPY put when the internet went down, and my account now is like $100. So I'm going to switch that up. I have a few ideas, but yeah, I'll go ahead and update y'all with that soon. And yeah, so everyone, enjoy the rest of your weekend, or I guess it should be Monday in the States right now. So enjoy y'all's last day of the weekend, and trade safe. Take care.